Morning, everyone. Good morning, morning, morning. How we doing today? Um, it is July 11th, 2024. It's Thursday. We got one more day to wrap up the week. And today, pre-market, what we had was the CPI data. Yesterday, massive trend day to the upside. Today, more inflation news, right? That looks pretty juicy. So the inflation data is the first thing that we want to comment about. Today is was the consumer price index that was published at 8:30 a.m. Eastern. That provides a fresh data on whether the Fed's tight policy is succeeding in pushing inflation down towards that 2% goal. Now, the Fed has the PCE, which is their preferred inflation gauge, realistically. And if the disinflation trend continues after stalling earlier this year, the central bank may be closer to cutting key interest rates for the first time since 2020. Economists will specifically watch housing costs, which accounted for more than two-thirds of the increase in core CPI over the past year. And when we look at the numbers themselves, right, you can just like pull up Financial Juice, for example. They light them up in like red. You can see exactly how it's broken down, right? Food at home, food away from home, right? Energy, commodities, all these different aspects of it. And if we take a look at the key figures here, you can see the U.S. core CPI month over month. The expected was 0.2%. Prior was 0.2. Excuse me. What came out was 0.1, so a softer number. U.S. core CPI year over year, right? A softer number, 3.4 expected, 3.3 came out. A negative U.S. CPI month over month, and then the U.S. CPI year over year, 3.1. Expected 3% that came out, and 3.3 prior. So that helped shape up a lot of this upside swing, but markets are pulling back towards the key areas that kind of held out volume on the overnight session and into the close after yesterday's massive rally to the upside swing. So with this inflation data, right, markets trading at all-time highs, continuing this upside momentum. We're still in an uptrend. Typically, what I'd like to see after these excessive moves to the upside that create these all-time high breaks after some very short period of consolidation in the market is if we can actually see another range-bound consolidation that creates a distribution at this new high. So I would like to see something like that. I'm not necessarily saying that is going to be the case, but it would be good to see something like that so that we can provide strength for the continuation on the bull side momentum. So one of the other things before we talk about how I'm looking at these markets to develop on the day session, create a trade plan, is what has been in the news recently, right? Members of Congress, should they be allowed to trade stocks? Now, naturally, it seems like a very, very unfair advantage, but we've seen multiple people do it, like Nancy Pelosi over the past few years, that have remarkable returns. Now, that debate has triggered phrases like insider trading, free market economy, and has been played out for years. With even popular websites tracking the buy and sell of lawmakers on Capitol Hill. So you can see like some Twitter accounts as well that follow Pelosi's picks mainly, right? Pelosi was early on that NVIDIA train. So raising fresh ethical concerns, a new bipartisan group of senators, including John Ossoff, Gary Peters, Josh Hawley, and Jeff Merkley, have unveiled a new proposal that might see some action later this month. So, if approved, the Ethics Act would stop lawmakers in Washington, D.C. from purchasing stocks and other covered investments, as well as barring members from offloading equities 90 days after the bill is enacted. So, starting in March 2027, spouses and dependent children of members would also be prohibited from trading stocks. So, violation of these rules would result in penalties of either official's monthly salary or 10% of the value of the asset in violation of legislation, whichever is greater. That doesn't even seem like that big of a fine realistically, right? That's ridiculous. And 2027, by then, we'll probably have a crash and then a rally. So, still, yeah, I guess it's a step in the right direction, but it's kind of bullshit. Anyways, so it hasn't been easy getting stock trading bans past Capitol Hill. The last effort, which centered in on individual stocks and blind trusts, took place in early 2022 during the trading boom that followed the COVID pandemic. In terms of actual insider trading, it's very hard to convict lawmakers due to the agency ethics officials rarely having a full picture of what employees are working on or the information that they're privy to. Another hurdle is proving the material part of material non-public information, as well as events that happen on a macro scale or affect entire industries. I don't think it's that hard to prove. I think that they're just covering it up. Anyways, Costco back in the news, right? We'll talk about a few. There's a lot of news today, so let's take a look at Costco here. Up pre-market, it's the Costco's. This thing has exploded. Anyways, Costco is up here pre-market for the first time in 7 years. What has Costco done? It's hiked membership fees for nearly 52 million customers. The news helped shares climb 3% in pre-market trading, along with a 7.4% jump in June sales, which topped comparable expectations in the latest quarterly results. So effective September 1st, annual basic membership fees at the box retailer will rise from $60 to $65, and all executive memberships will increase from $120 to $130. So while high inflation has forced consumers to cut back on spending, Costco's low price continues to attract shoppers, driving strong sales and increased market share. In terms of other news, Bill Huang, the Tiger Club founder of I can never pronounce this. Archegos Capital Management. I know who he is. Remember the puts on Triple Q, all that fraud, blah, blah, blah. He's been convicted of fraud and market manipulation that led the hedge fund managing over $36 billion in assets at its peak before its 2021 collapse. A jury in Manhattan found Huang guilty of 10 of the 11 criminal charges, while the former CFO, Patrick Halligan, was convicted of all 3 counts that he faced. And the collapse of the hedge fund led to more than $10 billion in losses for banks including Credit Suisse and Nomura, and over $100 billion in shareholder losses for the fund's portfolio companies. So prison time might be in the making for Huang, who also was involved in insider trading scandals back in 2012. Now, today we've seen the majority of the news that came out here pre-market. What we got going on was the CPI, but later on today we have, what do we have here? We have Bostic that's going to speak at 11:30 a.m. We've got another Fed speaker into Musalem at 1 p.m. We got 30-year bond auction, and then Treasury statement. So we got a few Fed speakers into the late morning session that might be interesting, but other than that, it doesn't necessarily seem that we've got a lot going on today's session after the CPI. Tomorrow morning, PPI as well, that's coming out. So the big question revolves around, what do we do with these markets today? The S&P 500 after yesterday. Remember yesterday we were talking about 46.45. That was a must area to hold for the sellers. Otherwise, we're going to see a trend day. Trend day happens. Now, today, what was I looking at? Today, we saw the CPI made a new all-time high, 57.10 area trades. We pulled down significantly, trading in and around this high volume from yesterday's session. A lot of volume is consolidating in this B shape. So realistically, I think that if markets hold above this like 82 area and hold above 72, we could try to push to the upside. There's a very thick B shape that's trading right now. I would want to lean more so on the side of a range to form today at these tops, right? I see we have this long extended wick failure from the pre-market rally of CPI. So if we hold and create a range in these areas, right, we can see where markets are imbalanced. We have the start of a lot of positive delta at like 95, which could hanker some kind of sell pressure, but between 56.95 all the way down to 56.72, it'd be great to form some kind of range there and create that distribution so that we can have some kind of consolidative period for markets to see a balance before potential expansion. So under 72, we can probably trade down to 56.60, but it's going to be one of those days where we have all this like new information trading into highs that we need to gather more information as the market opens to get a better understanding of what is going on. So right now as things stand, right, I'd like to be long realistically above this like 81, 82 or like 72 on the S&P to see if we can continue this trend, right, to the upside. So let's open up our live trading room here and we'll see what we get. We'll see what's cooking. I'll see you guys in there. Check out community.tradeproacademy.com, and we'll go live tomorrow. Naturally, we'll do our stream as we do on most Fridays, and I'll see you guys there. So thanks, Michael. Good morning. Hope you're doing well, and everyone that watched, and we'll do this again tomorrow, and stay tuned for the continuation after this news update for our stream